Hanlon. Sinead and David will be here for Q&A after Ruth's presentation. So warm welcome please for Ruth Kennedy.
Thanks, Helena, and thanks everyone for inviting us here again today this year. Last year we had the graveyard shift just before the end of the conference. This year we get the morning, so hopefully everyone's awake. And as the deadline of 1 January 19 is looming, I suppose, it shows the importance you and IPASS are giving this presentation to make sure everyone is aware of what is coming. Unfortunately, I've never been here for a drink before, even though I am a Tipperary woman and you think I should be used to coming to Croke Park. I think my first time was last year when I presented at the IPASS Conference. Actually, I was here once, but it was for an Ireland-France rugby match. I better not say that too loud. But Tipperary will be back, I'm sure. And Sinead is a fellow Tipperary woman, so we allow David a dub, celebrate sometimes. Some of you have seen some of this before. A lot of you have probably met Sinead on her travels. I think if Harry Potter could show her how to apparate around the country, it would make her travels easier. She travelled back from Letterkenny yesterday to go straight into a presentation for the Small Firms Association through the rain and through the traffic of Omagh and Ardee. But we have been travelling around the country with IPASS and with anyone else who'll have us. We kind of say we have a slide deck, we'll travel. So happy to present anywhere, because key to us is making sure that employers, agents and those in charge of payroll are aware of what is changing and are now making the necessary changes to ensure that they are ready for PAYE modernisation. So just to give you a bit of the background and the design principles that have gone into PAYE modernisation. I spoke at an event the other day and David McWilliams was on before me, so it was a bit of a hard slot to follow. He did his usual routine of stand-up comedy with a bit of economics thrown in the middle, and I suppose maybe offended nearly half the audience between those who had good rooms and those who were Protestants and those who were getting remarried at the age of 50 to women who were 20. But one thing he did do was said that the civil service were incapable of unconventional thinking, and that the groupthink from the civil service, the Department of Foreign Affairs, and things like Brexit and many other things was what led to the groupthink in the country. I think PAYE modernisation is a classic example of unconventional thinking. If we were to design PAYE today for the very first time, we definitely wouldn't design it how it operates currently. And really what PAYE modernisation is not a redesign of PAYE, it's actually throwing it all up in the air and coming up with something that is fit for the 21st century, fit for the global mobile workforce, fit for the changing economy. So why is it we're changing and why now? You more than anyone know that the nature of employment has changed hugely since PAYE was introduced in Ireland in the 1960s. It was actually introduced in the UK in 1944, really to get the money required for the last push on the Second World War effort. And at the time was a temporary measure. We all know things like temporary measures. USC, income levy, we won't mention them. It never went away. It is a very effective mechanism of collecting tax on employment income. And when it was introduced in 1944 in the UK, if you read back the journals at the time, the politicians said it wouldn't involve complex calculations by employers. I think we failed in that, or you all wouldn't have a job. But a lot has changed since 1960, since we introduced it here, no more so than the nature of employment. So a job for life in the civil service or in IPASS or in Mazars is no longer the norm. People are moving jobs much more frequently. People are coming in and out of self-employment. We all know about the gig economy or the shared economy, the people working for Deliveroo that you pass on your way home, Airbnb. In a recent global taxpayer survey that was done, 5% of people said they participated in the gig or shared economy. But in the next 5 years, 25% of people said they expected to get some income from that economy. So that is changing. I remember reviewing a CV that I got once for an IT developer, and they were 2 years out of college, and they had worked for the last 2 years gainfully through a website where they would do jobs that someone on the website somewhere in the world asked them to do, like building an app or fixing a website, or and they had got employment for that over 2 years. So The nature of employment is changing a lot, and pay-as-you-earn as it currently operates doesn't really work well unless you are in that steady job for life. And really those who need pay-as-you-earn to work the best for them, those who need their entitlements and need the net pay correctly, are those it probably works least well for, so those in casual employment and those moving around jobs. We've already heard how payroll is changing immensely, and in 1960 when pay-as-you-earn was introduced, it was probably much more of an Ebenezer Scrooge ink and quill type of operation than now when you look at the numbers in this room and how professional payroll has now become. ICT has changed, and we see it all around us. And now we can do things we couldn't have even imagined. Now, we still can't apparate. I'm hoping that will come soon. But for many years, we've used the internet, for want of a better word, to take paper forms and provide them electronically. So you all know you used to fill in a paper P45 and then it was available on Ross. You all used to get a paper P2C and then it was available on Ross. But all that was really taking a paper process and putting it onto a computer. ICT now allows us to do a lot more and reimagine how we might operate our design systems. Sinead was presenting to the Irish Farmers Association in Letterkenny, and I had presented previously to a group in Portlaoise, and I was trying to explain real time to them, and Sinead had seen a new product called Moo Call, which you attach to the tail of a cow, and due to the movement of the tail just before it's giving birth, it alerts the farmer in real time that the cow is about to give birth, so no longer do they have to get up at all hours during the night to see is the cow about to give birth or have cameras. So not only in payroll or PAYE are we looking at real-time data, the Internet of Things is being used all around us. People's expectations are also changing. We get about 1.6 million calls to our PAYE helplines during the year. Most of them saying, I haven't got a P45 from my previous employer, or why was I taxed a certain amount, or I'm on emergency, how do I get off it? And while we can help and support, they're actually usually quite shocked that we don't know what tax was deducted from them, and we don't have sight of their payslip that they're talking to us about as they ring us. And it's not till February the following year that we actually know how much pay and tax they had. Companies as well, their expectations are changing. We talked about the global mobile workforce. We look at some of the tech startups down in the Silicon Docks. We look at us aghast when we say these are all the forms you need to fill in to meet your reporting obligations. And all of those, I suppose, have led us to a point where we can look to use unconventional thinking and modernise pay-as-you-earn to make it fit for the current economy. So when we started on this journey, and we announced, Minister Noonan in his budget back in October 2016 announced that he has tasking Revenue to complete a public consultation on PAYE and how to modernise it. And as we started working through that with all the various stakeholders, we came up with a set of key design principles. And in a project that's over 2 years long, you need to make sure you define at the outset what it is you're trying to achieve, because as you go and make many decisions along the way, you can often deviate from where you expected to go and end up with something that's very different than your original vision. So we set these out very early on. Many of you have seen them before, but these really set out what it is we're trying to achieve through PAYE modernisation. 3 main stakeholders in it. First is the employer, or the agent, or the payroll bureau, or yourselves who run the payroll. What is it we're trying to achieve for you? I mentioned ICT has changed, and now we have ability for machines to connect to machines without any huge overhead for those operating the machine. So what we are trying to do is seamlessly integrate into your payroll process. For every employer, payroll is a very important process for them. Very important that they pay their employees if they want their employees to be productive and doing the jobs they're employed for. Everybody does their payroll, so what we want to do is say we would just like to be a byproduct of that payroll process. It's a process you're already doing, it has value add to you and your company and your employees, so we will just be a byproduct of that process. And that will reduce the cost for employers to comply. And then to that end, we can get rid of all the forms that you currently need to fill in to meet revenues reporting obligations. So abolishing the P30s, the P45s, the P46s. You'll no longer be required to produce P60s for your employees, and the end of year return goes away. Run your payroll as you've always done, and that'll meet your reporting obligations. Really important to note, there is no change to tax due dates. And that's very important for employers and businesses who have cash flow and are built around the current due date. So if you currently pay monthly, you'll continue to pay monthly. You will report in real time, but the payments will either be monthly, quarterly or annually, depending on your current circumstances. And ultimately, this should lead to time savings for employers, for payroll people, for accountants. The employee is very important in all this, and we already heard a few mentions of GDPR, and it is really important to remember that the data belongs to the employee. More importantly, the gross pay actually belongs to the employee, the deductions belong to the employee, the net pay belongs to the employee. Often in our consultation, particularly with some smaller employers, they just see the net as the employees and the deductions as a business expense they need to find, and don't always calculate that till they get to the end of the year. So for the employee, what we want to do is really make them CEO of their own tax affairs where they want to manage them, but hopefully make it so that there is very little management required. So we'll continue our use of simplified online services through My Account, where people can see the jobs they're registered for, claim credits and reliefs as they're entitled to, allocate their credits as they want to, and complete end-of-year claims for medical expenses. Really important to this is we want to maximise the use of entitlements. So this is back to pay as you are not working well for those who need it to work the best. We often find people are overpaying tax. They're on emergency for too long, or they have all their credits assigned to a job where they don't earn enough income to actually make use of them, and they're not aware of it. It's quite complicated. An employer isn't aware of it. By us having real-time payroll data, we will be able to ensure that the employees are maximising the use of their credits in year, so they get the benefit of the money when they need it the most. To that end, we will issue an automatic end-of-year statement to every employee so that they can see across all their employments their pay and the deductions that have been made, and that is both income tax, USC, LPT if it's collected through the payroll, and PRSI. And then if they want to claim their medical expenses or something else at the end of the year, they can do it. But then they have certainty that all their deductions have been made correctly in that year. Many employees are terrified to come to us to claim their medical expenses because they think they're going to get a refund, only to find their employer hasn't been operating correctly during the year, and actually they've an underpayment to pay. Really importantly, back to it being the employees' data, is they will have real-time accurate data of what has been deducted from them and remitted to us, and more importantly onwards to the Department of Social Protection, where PRSI contributions are really important. Again, we've seen times in the past where an employer may be deducting tax and PRSI but never passing it on to us and us onwards to social protection. So when that person goes to claim the benefits they should be entitled to, they're told they've no PRSI paid, and they have no sight of it. They just have their pay slip which tells them it has been deducted. So really leading to transparency for the employee in the whole process. For revenue as a stakeholder, what we will gain from this is an in-year statutory return. At the moment, the only statutory return for employers is the end-of-year P35, which means if an employer has been non-compliant during the year, it only comes to light the following February. And anyone who is in the compliance business knows the easiest time to address non-compliance is closest to the fact of when it happens. So by having an in-year statutory return, we will be able to address non-compliance much quicker, and that will make compliance easier for us. We'll have accurate up-to-date income details for employees, which will allow us ensure they are maximising the use of their entitlements. Ultimately, play it forward after we've issued 4 end-of-year statements for every employee in the country every year. The amount of contacts should start to reduce. I don't expect at the start of this any reduction in contacts. Actually, there'll be an increase in contacts because it's a change, but the overall objective is to reduce those contacts. And then based on the payroll data is a very good indicator of risk within a business generally, and the payroll data will be used through our risk analysis systems and our data analytics to identify risky businesses and allow us target our compliance resources to the greatest area of risk. So just to give you some context in which this operates in, and many of you know this, we have 2.7 million active employments on our systems. So that's where you have reported through your P45 or P46 that someone is working for you. Now again, that number is slightly low because every year when the P35L comes in, we hear about people working for employers for the very first time. We had 120,000 new employments registered with us on foot of the 2018 P35L, which means you haven't had a P2C issued, which means tax can't have been deducted correctly. The number of employees with more than one employment at a time looks quite low based on our data, and I definitely think it's higher than that, only 10%. That's based on the dates you give us on the P45s and P46s. And again, we can see doing analysis of our data, they're not always timely and accurate. And we also know in some instances employers have the same person working with them more than once, maybe sometimes a pension and a live job, or in some sectors I know the HSE may have a nurse who's also, I don't know, doing home help and something else, and they're on the payroll multiple times. So we need to bear all of that in mind through the design of this. There's about 219,000 employer registrations, and interestingly 110,000 of 5 or less employees, so over half are what you might call micro-employers. 98% of those filed through ROS, and through 2017 there was 5.4 million forms that employers had to complete to comply with revenue regulations and obligations, and that's what we're trying to eliminate. So we're trying to take those 5.4 million forms out of the system. Just to remind everyone of their current obligations, because sometimes I present and I say this will be time savings and this will make it easier for you, and it definitely will if you meet your current obligations. Sometimes people seem to have forgotten some of their current obligations. Really, really important, and Helena mentioned the taxation of illness benefit at the beginning, really important that if you get a new P2C, you should always be drawing it down for an employee and applying that every time you pay. In the past, probably P2Cs rarely changed. Now, with things like the taxation and social protection payments through the credits and the rate bands, P2Cs for individuals are changing more and more frequently. So you should make sure you're always applying the latest P2C. Always calculate the tax to be deducted when you're making a payment. Always provide your employee with a pay slip that shows the pay and deductions. That's actually employment law, that's not our law. Every employee is entitled to a pay slip to show their pay and their deductions. If someone starts or leaves, you need to complete the P45, P46 process and do it to its completion. I think sometimes the P45 comes in to the payroll side, the credits are put into the system, but it never is sent onwards to us so that we don't actually have record of that new employee. Every month or quarter, submit your P30 payment, and then at the end of the year, by the February, you're all well aware of the P35 listing for your employees. To get ready for this, we thought it was really important that we had the legislation signed off a year in advance so that all employers were aware of what the new legislation would be to allow them get ready for these changes. And on Christmas Day this year, Michael D. Higgins signed into law the Finance Act 2017. I'm not too sure why he chose Christmas Day to do it. Maybe it was just to get the poor guy from the Oireachtas out of his bed to bring it over on Christmas Day. But this was signed into law in 2017. It is there for everyone to see now to help them get ready. So what is in this legislative framework for pay-as-you-earn? What it provides for now is something new called a revenue payroll notification. So the old P2C will be gone, and now employers will be issued with a revenue payroll notification for each of their employees, and again that may change over the course of the year. And that is a notification to payroll to tell you how to perform your calculations. The legislation also says that on or before the payment of emoluments, that lovely word, to employees, employers must report to revenue the pay and the statutory deductions for that employee. So simply put, if you pay weekly, every week, on or before you pay, you need to provide a report to revenue for each employee that shows the pay and the statutory deductions. Revenue will then issue to every employer a statement at the start of the subsequent month. So take January, say your weekly pay, there might be 5 weeks in January 19, looking at it. You may have made 5 payroll submissions, which show all the deductions you have made. Early February, we will issue via ROS a statement to you as an employer to say, here is the sum total of your deductions of income tax, USC, PRSI and LPT. And that will be issued and will then be deemed your return by the 14th of February. So January's payroll will result in a statement early February, and that will become the employer's return on the 14th of February. Payment dates have stayed the same, as I say, so if you're a monthly payer, your payment will be due if you pay and file online on the 23rd of February. If you're a quarterly payer, you will have the monthly return deemed, but the payment due date for that return won't be till the 23rd of April, the end of the quarter. So you'll have 3 returns and a payment due at the end of the quarter. There is provision in the legislation for what we call persistent technology failure. So this isn't, I forgot the password to my computer, or the person who normally does the payroll isn't here. But this is real life scenarios. Storm Emma we had this year, Storm Ophelia, people lost power throughout the country for a number of days. And obviously you wouldn't be able to report on or before if you have a power outage like that. So what this bit of the legislation allows is for the payroll to be then reported when the persistent technology failure is fixed. In terms of payment, there will continue to be a direct debit facility for employers subject to revenue approval, and we're also going to provide a variable direct debit which will allow you, a bit like your gas or electricity, pay what you owe every month, every quarter, every year. 2 other important things to note that were brought in the Finance Act this year were that the basis of assessment for individuals has moved from what was known as an earned basis to a receipts basis. And that really means that it's the money that an individual receives during 2018 is taxed in 2018. And we had a couple of questions at the stand on this earlier. Often you pay in arrears, and maybe you're paying the first week of January for work done in December. It's when the payment is made that is taxed. That's a 2018 payment and taxed in 2018, not a 2017 payment and taxed or credits applied based on 2017. That has come into effect from this year. So any payments made, I mean, from an employer perspective, it has always been on a receipts basis. This means now from an employee perspective, it's also on a receipts basis. There was also a provision put in the legislation from this year in very certain scenarios where an employer fails to withhold deductions correctly, the employer will actually be liable for those deductions that they should have withheld. And it's really where someone agrees a net pay arrangement and pays net all the time, or where someone hides emoluments as something else within their accounting system. And the employer will now be liable for those deductions that should have been made on a grossed up basis. Both of those came into effect from 1 January 2018. The rest that I've explained to you comes into effect for any payments made on or after the 1st of January 2019. But do think of your December period. If any of you run your payroll during December with a payment date in January, it will apply to those payments too. So what does it look like, the high-level design of PAYE Modernisation? At its simplest, and all of you will laugh at my simple payroll process here, but at its simplest, when you're doing payroll, you need to know the employees you want to pay. And you need to know the revenue payroll notification for those employees, because that will feed into the calculations in your payroll software, or if you do them yourselves on Excel, to allow you calculate the deductions that need to be made. And I know there's lots of other things you do in payroll, but there is a point at which you finalise your payroll or you close your payroll for any given period. And it's the time that the bank file goes, that you create your pay slips, and what revenue will get at that stage is a report, not that dissimilar to your bank file, which shows all your employees, and obviously that shows the net that they're getting paid. The report to revenue will have all your employees and the deductions made. So it will come at the end of the payroll process. The employee from their side will see obviously the money in their bank or in their hand. They will see their pay slip, and should they log on to our online services, they'll be able to see the pay and the deductions as reported by the employer. And that's important on the transparency and the data quality and the data accuracy. They should be able to reconcile what they see on our system to their pay slip to what they see in their bank, and all of those should look similar. To get rid of all the forms, how do we do that? So I talked to you about the statement. We'll issue you the statement every month, so there's no need for a P30. There's actually no need to file a return. That statement just becomes the return. You will have time between the issuing of that statement and it being deemed the return on the 14th if you see something incorrect, if you fat-fingered a zero and made someone's deductions, 10 times more than they should have been. You can correct the underlying payroll data, we will regenerate the statement, and that new statement will become your return. The P45 and P46 process goes away. So I mentioned there's a revenue payroll notification. If you hire a new employee, you put them into your payroll software, all you have to do is request a payroll notification for that person. So really asking us, how do we tax them or how do we calculate their deductions? And based on that request, we will set up the employment record for you. And when someone leaves, you can put a leaver date in on your payroll software. The person has moved and that will be reported over to us as part of the submission, and that will cease. So all you're doing is working within your payroll. No end-of-year returns. Every month stands on its own, so now this is a steady heartbeat through the process. Each month, so there's no difference of April 2019, December 2019. Each month stands in its own right. And at the end of 2019, there'll be no obligation from us anyhow for employers to produce a P60. Funnily, some employers have said to us they want to produce an income statement for their employees anyhow, but they will get an end-of-year statement from us for all their income sources earned, so there's no obligation from us to produce a P60. We've a number of reporting options, and I said really what we're trying to do is seamlessly tie into your payroll process. And the most seamless integration we have is what we're calling direct payroll reporting. I would imagine most people in this room use payroll software. And what ICT has enabled us to do is link directly with payroll software and payroll software to link directly with revenue systems to allow you fulfill all of these requirements without ever leaving your payroll software. So you'll never have to see ROS or find your digital cert in your browser that you lost because you moved machines. So on starting your payroll run in your payroll software, what the payroll software will do is ask revenue under the bonnet, under the covers, give me the latest revenue payroll notifications. That means you always have the latest credits and cut-off points to apply. If you've added new people during the week, the month into your payroll software, so some new employees, the software will say to us, and can I have new revenue payroll notifications for these people? We'll set up the employment on our side and give you back the credits and the rate bands to perform the calculation. So that means there's no need for emergency anymore. We will always tell you, here are the credits and here are the rate bands that need to be used. If the person has left a job the week before and you're now starting with you, we'll automatically move the credits and the rate bands over to the new job. If it's a second job and they've all their credits and rate bands assigned to their primary job, you will get back maybe nil credits and everything at 40, but you don't need to apply emergency, because actually often emergency means people pay too little tax where they have their credits and rate bands assigned somewhere else. The payroll software will then be able to use what we have provided back in the payroll notifications, along with the pay information that you put in and other deductions you might be making, travel savers, bike to work, sports and social, to calculate then the statutory deductions for every employee. And then again, even if you add new employees at this stage of the process, or you're halfway through and you have someone new, you just get informed by HR you need to pay, again, the payroll software can say, how do I calculate deductions for this person, and get a new revenue payroll notification from us. And then when you come to complete or finalise, or all the payrolls have some sort of button or something to say this is done, what the payroll software will then do is create basically a message of data that shows for you as an employer, or for that employer registration number, each of the individuals you've paid and each of the statutory deductions you have deducted from that pay. If there's a new employee, the start date will be included on that submission. If someone has left and it's been recorded on the payroll system, the end date will be included on that submission. We will send back an instantaneous acknowledgement to the payroll software to say, thank you very much, revenue has got that data. And then we will send back very quickly to the payroll software if there are any errors with what has been provided. Now, the level of validation is very light. We're not doing validation saying, oh well, You said you paid Helena 1,000 and you only took off 5 USC. That doesn't look right. That's not the validation. We're looking at, is it a valid PPSN? Have you given a valid PRSI class? If you've said there's PRSI to be paid, have you reported either 0, plus or minus? So really, with tested software, there shouldn't be validation errors coming back. But if they are, we report them to you. They can be fixed and sent back to us. So that is really the most seamless way to integrate, and we're working very closely with the payroll software developers and have been for the last 18 months, defining what it is their software needs to do to allow them harness what we have built on our side. There's also a facility for people who don't want that seamless integration and still like the old file upload, file download process. And some people tell us you're all very conservative in payroll. I don't think you are at all. But that you like to see the file and you like to physically upload it every time. So we have built a facility for that too. Or it may be that you pre-prepare and you have poor internet connection and you just want to connect at the end of the process. So we will have a facility through Ross, through our Ross payroll reporting. So Ross is getting a lick of paint. This is a draft screen of what the new Ross dashboard will look like. This will be there actually from June. This year we've added a new section for frequently used services. So if there's a couple of things you always use, a bit like your favourites on your browsers, you can set them up there. We're putting a new section in at the top called Employer Services, and this is where you'll find all the services you need for PAYE Modernisation. We'll have a couple of services there in June. The full gambit of services will come in December. But from here you will be able to request revenue payroll numbers, notifications, and you will be able to make payroll submissions. You will also be able to view all your payroll submissions you've made. So I don't know if anyone is familiar with the UK RTI real-time reporting process. One of the key lessons we learned from both HMRC and employers who use it was employers could never see what HMRC held from them in terms of their payroll submission. So a very busy screen, but really what this is showing is a submission made by an employer. You can group multiple submissions together if you want to, so we allow you group things together, and it allows you to drill down to each of the line items to find where maybe the income tax deducted has come from. So you will have full transparency of what we're holding on our system that you have sent us. Again, from the dashboard, you'll be able to access a new online statement of account. So this is a bit like your banking online. This is a statement for an employer of their liabilities and payments made. So again, a draft screen of what this might look like. You can see there's 3 months there. So the 2nd of February 2019, maybe you paid no payroll. Often instances in a seasonal business, you didn't pay anyone. So there was a 0 statement and that became a return. March, you can see that there is a return there for 570, no payment yet made, and you can see the due date of that payment isn't until the 23rd of the 4th, so you don't have to pay that till the end of April because this is a quarterly payer. And then you see the top one, so the April month, you can see there's a monthly statement issued and it's issued for €414. You can click into that statement and you'll see where that €414 came from. So it is a sum of the income tax, PRSI, USC and LPT as sent via your payroll submissions. If that comes as a surprise to you and you're saying, where do they get 414 from? You'll be able to click on that payroll details button just by the little magnifying glass, and you'll be able to drill down to each of the submissions you have made that comes with that figure. So this scenario, they've just made one submission, it was made, they called it week 1, you can call things whatever you want. They made it on the 4th of the 4th, and here's the data, and you can drill right down even further to see, well, that was made up of Ruth, Helena, Sinead, David, and these were their figures, so you'll always be able to reconcile. All of this data is also provided back to the payroll software every time you submit, so they'll be able to reconcile their figures against our figures every time a submission is made. So payroll software is really, really important in all of this. And for this to be effective, what we need to make sure is both the revenue software is robust and working, and the payroll software is robust and working. So we've been engaging with IPASS and the Payroll Software Developers Association since actually probably even early 2016 when we started thinking about this. And the payroll software developers gave us 2 hard deadlines. They said, if you want us to do this, we need to have all the technical specifications of how the interactions are going to work 18 months in advance. So that was June 2017. And we need a 9-month testing window. So we need the ability to test our software with revenue software for 9 months before we go live. So that was the end of March 2018. So in June 2017, we published all our technical specifications after a lengthy, I suppose, co-design approach with many stakeholders, many people here in this room, with IPASS payroll software developers, and that was published in June. And at the end of March, we opened what we call our public interface test. This is a test environment for payroll software developers to test their software with our software before they go and tell you, here's your new version of our software. So it was launched in March 29th this year. We did these slides last week for Helena. We've 38 payroll companies fully registered with us to do their testing. There's 8 of them who are actively testing at the moment, so we can see from things coming in and out. A lot of others have told us they will start their testing in May this month. We provide a help desk tool for them so that if they have queries or if they have concerns, they're able to raise them to us and we provide answers to them. So that means that all the payroll software that you're using, they're all busy making the changes to ensure that they can comply with the new legislation, but they're also having a 9-month testing window to test that, but it also tests our software as well. So they're doing all sorts of submissions, FODAs, trying to break it, all the things you know, so that we make sure both sides of this is very robust to mitigate any risk when we go live. Important in this is data quality in ensuring that people pay the right deductions. And I remember a very early co-design workshop we ran, and I don't know, we were talking about PPSNs or we were talking about employees or something, and someone asked me, but what about all the employees with the same PPSN? And I said, what employees with the same PPSN? Someone else said, but we often change the PPSN in our software, so when we set them up, we don't know who they are, so we just stick in Helena's PPSN, and then when we find the PPSN, we know it. And I can kind of understand in some ways, because they said to me, well, really the important data item for us is the bank account, because that's what we're paying. PPSN is less important in terms of making sure someone is paid. Unfortunately, PPSN is very important to us and also very important to the employee, and it's crucial that people are recording the correct PPSN for their employees where they have it. Absolutely, we understand that someone starts with you and they need to get paid that day for the work done and they forgot to bring the PPSN in with them, and there is a facility to submit the payroll without the PPSN, and once you have the PPSN, the payroll software attaches it and we can backfill all the old submissions that were made for that employee. But again, a lot of payroll people also told us they're very far removed from the employee. So it's not like I work in the corner shop and the guy comes to work with me and I know exactly who it is. You may have a centralised payroll department and people working all over the country or working globally, and you never actually see the people you're paying. So you can't get to ask them for their PPSN. Or in the pensions world, you might have got a form from some insurance broker about the person when they bought their pension, and that's the record you have of their PPSN. So to help with data quality, and we got 60,000 line items on the P35L last year where no PPSN was provided, which means those people don't get the benefit of the PRSI contributions they've made and potentially get demanded tax where they've actually already paid it. We've developed a PPSN checker facility, and we actually launched this in Ross in mid-April, so it's there already now if you log into Ross. For data protection reasons, you can check 10 at a time because what we don't want is someone or some system trying to cycle through PPSNs, all of them at one time. And to that end, we've put a CAPTCHA. You're all familiar with CAPTCHAs from Ticketmaster if you're buying tickets for the GA, to make sure, again, it's not a robot doing it. And the result you will get back is either that, yes, you can use that PPSN with confidence, or you may need to go back and check it. So you fill in the first name, surname and the PPSN number. If you have things like address, you can include address, or if you have county, postcode or date of birth, you can include them, and you can add 10 PPSNs at a time. Use the CAPTCHA and submit it to us, and what we'll respond with is the employees that you've inputted, their PPSNs, and whether it is valid to use or you may need to go back. So where it's valid to use, what we're saying is based on the information held by revenue, the PPS number and the details you have entered are valid. Where it's invalid based on our data, and we all know of people like myself who never changed their name when they got married, or people whose real name is Michael but they tell everyone their name is Jerry, and that's what Michael is what's on the records, but Jerry is what everyone knows them as. It may just be that there's a mismatch like that in the data. So really what we say is not that this is definitely wrong, because sometimes there are those mismatches, but we're saying please verify the details with your employee, and you can ask them to quote something like their tax credit cert or the public service card if they have it. But that's a useful facility that's there to help you all look at your employees, and if you don't have PPSNs or you're unsure that you have the correct PPSNs, it'll allow you to check them before we get to the 1st of January 19. We've done a lot of stakeholder engagement in this process, and what we learned early on was if we wanted to seamlessly integrate with payroll, we needed to understand payroll. We understood tax, we didn't necessarily understand payroll, and that's why we went through both the consultation process and a 6-month co-design phase to get us to the design of PAYE Modernisation. Some things that became apparent to us through this engagement was that due to the fact that we had an end-of-year return, a lot of people based their business process and their payroll process around the need to get things right for February. So not get it right all the way through, or get it an approximation all the way through, but there was this big effort at the end of the year in January and into February to get the P35 done. Or we've heard of agents who've told us that people have come in with a shoebox of check stubs and said, do me a P35. So they've been busy making payments net every week or whenever required, and then are looking for it all to be grossed back up. That is not correct in current legislation, and definitely won't be correct in the new legislation, and the real-time reporting will make that very visible to us. So it's something you all need to consider in terms of how you operate your payroll. What tidy up, mop up are you doing at the end of the year, and what changes do you need to make to your business process to make sure you're doing that on a more frequent basis. Corrections. I don't think we've talked to anyone about payroll who hasn't mentioned corrections, and we do recognise that errors are made in payroll. But every effort should be made to ensure that the data you submit to revenue is accurate and timely. If you underpay someone and you're going to pay them in the next pay period, that isn't a correction. The tax follows the money, so the tax doesn't get deducted until you make the next payment. Really, a correction is where you fat-fingered a zero, or you paid someone and then just before the bank file goes out, you actually pull that payment from the bank file, so the payment isn't actually made, and you may need to pull that submission line item from us. If you are collecting under and over payments in next pay runs, they just get reported in the next pay run. If you pay someone you shouldn't have paid and they don't hand you back the money, that's not a correction, that payment still stands. If they hand you back the money in 3 weeks, at the time the money exchange hands, that's when you report to us that the money came back. You don't wipe the original payment that was made. And as I said, correction type data will feed into our risk analysis, so it's an area where you see if there's a lot of corrections going on all the time, it may lead us to wonder what practices are in place. And as I said, the employee will be able to see what you've submitted, so if it bears no resemblance to their pay slip, it will lead to questions, I suppose, to yourselves and to ourselves. I mentioned earlier things like we get P35Ls with no PPSNs, or we hear about employments for the very first time when the P35L comes in. And what we've seen is, I suppose, there's a misalignment between our records and what we think, or who we think is employed by you, and who you think is employed by you. And the main aim of modernisation is to ensure the right people pay the right tax at the right time, and the revenue and employers have the most up-to-date details. So to aid us with that, we have developed something called the list of employees, which will allow employers from mid-June onwards upload a list of your current employees We will match it against who we think is working for you, and based on that matching we will either cease people who are no longer working with you, or if you have people who haven't been registered with us, we will start them, which means you'll be getting correct P2Cs out for people. And the main objective for this is to ensure that the very first RPNs or payroll notifications issued in 2019 are correct. So you will be seeing data on our website soon around this, and we've been working with the payroll software developers so that the payroll software can produce this list of employees. It's very much like the start of your P35L without pay and deductions. But it will allow us all align our data, and once you've uploaded that list of employees, you need to make sure you follow the P45 and P46 process for starters and leavers after that. External change management is really important in this, and that's why we're here today, and that's why Sinead has bald tyres from driving the country. We just last week issued letters to every employer in the country, so all 219,000 employer registrations were issued with a letter to tell them about the changes that were coming. We did a look at whether you had payroll software indicated on your P35L or not, and tailored the letter based on that. Particularly for those not choosing payroll software, we may do a second letter in September, because those are the ones that I suppose need to think more about their processes in terms of how they're going to apply. We are doing presentations, as I said, have a slide deck, will travel at every outreach event we can. We had one with the small firms yesterday, the Irish Farmers Association, we've done some with the big accountants, many with IPASS, we did the end of year update, and we'll do many more. We always have a set of national compliance imperatives, so these are compliance activities that Revenue undertakes every year, and this year there's a particular focus on the employer reporting on-prem. So we are looking at risk as indicated through the P35L, and there will be a series of compliance letters being issued to employers where we can see things aren't being operated correctly. And any intervention or any engagement we have with an employer, we're using it as an opportunity to make sure they're aware of what's coming and they're thinking about making the necessary changes. Again, based on the 2017 P35L, we got notified of employees that we didn't know were working with you, and so we've been issuing P2Cs out for those employees to make sure you have correct credits and rate bands to calculate the deductions correctly. We're also starting a set of customer service visits by our district staff all around the country, a lot focusing on the smaller employer and the smaller employer with no software, to actually sit down with them and explain to them what these changes mean for them and help them understand what they need to do to get ready. We'll have a media and advertising campaign in June and December, and we're going to have some regional seminars, and I'll come to those in a minute. Just to give you a flavour of the engagement we've done, this is a list of events, and there's been many more that we've done April, May and June. Every 3 weeks we meet with the payroll software developers, so that's an ongoing engagement, and we actually had a meeting yesterday. But we've been doing as many events as we can to make sure as many employers and payroll operators know about the change and are starting to make those adjustments they need to be ready. So what do you need to do to prepare for PAYE modernisation? Some very simple checklists that we have, and when we created this first we kind of thought, well, everyone will have this, but actually it turns out to be very useful for a lot of employers. Have you got the right public service number for all your employees? Have you registered them with Revenue, and have you got an up-to-date tax credit cert for them all? Have you completed the P45 process when someone stops working for you? Have you adequate controls in place to ensure benefits and notional pay are being accurately calculated during the year? So this is maybe one of those mop-up activities that's done in January, or a housekeeping activity. You need to look at that being done more frequently and at least quarterly. And are you aware of your duties as an employer at the end of the year? I mentioned the seminars, so in the letters we issue to all employers, we advertise seminars that we'll be running all around the country in September. They're free to attend. You can sign up for them on the website, and we will be giving you full demonstrations of how the system will be working, and information much more detailed than we have today, because much more will be built. And you'll be able to ask questions, and we'll have stands and people available to support you through the process. So if you go onto the Revenue website, it's on the hero item, as we call it at the moment. I think we've 3,300 signed up for the seminars as of yesterday evening, so there's a big uptake in them, and we will be running those all around the country. So register your interest there, and all you have to provide for us is a contact email so we can tell you when they're on and an indication of the size of the employer that you are. We're also constantly updating our website to ensure that you all have access to the most up-to-date information. So under revenue.ie there's an employing people section, and down the bottom in the red you'll see there's a PAYE Modernisation section. And if you go in under there, we're constantly updating that. We put up all the presentations we've been doing. We do a monthly external stakeholder meeting, of which IPASS are a member of, where we show them changes we're making and things we're doing and provide insight into what people need to do to get ready. And we also have a dedicated email address if people have queries. So that's everything I have. We have time for questions, I think, if I didn't overrun. And we'll be at the stand later if people have other questions they want to ask individually. So just like to thank Helena and everyone from IPASS. We work very closely with Kieran and Ger as well, through the Payroll Developers Association and through our external Stakeholders Association, giving us this opportunity to talk to you all today. Thanks very much.
Thank you, Ruth. Definitely food for thought. While we've heard about PAYE modernisation, you can see now behind the scenes it's moving at a fast pace. There's an expectation that all of us will be ready for the 1st of January 2019. As you can see, Revenue are getting their side ready. So the question is, are you ready? And what we should be doing. So I think it's only fair to go to the floor for questions. Now is your time. I know Revenue have their stand well manned with personnel to answer all your queries during the coffee breaks, lunch, etc. But now that we have the real PAYE modernisation people here, you can ask some questions. So I'm going to open the questions to the floor. Is anyone brave enough to ask the first one? Michael. Can I have a microphone for Michael, please?
Hello, can you hear me?
Yes.
Just a few questions there. You just mentioned on page 10 there, automatic end of year review. Does that mean that everybody will get a P21, whether requested or not, from now on?
So what that will be is an automatic end of year income statement. So it won't be a P21 because you will still have time to claim health expenses or declare other income that may need to be declared. But it will be a statement that will set out pay and deductions as reported through your employers. Also any credits that you have claimed, and maybe any other income that you've already had coded, so you might have declared your rental income and have that collected through the PAYE system. You will then be able to go on and claim health expenses, and then it will turn into a P21.
Okay, just another question there. P60s you're saying are gone, and everybody would be looking for their P60s, so how does an employee now get something similar to a P60?
So that end of year statement will give them the same details that are available on a P60, but it'll be at an aggregate. So it'll be all employments together on the one statement. And what we're doing is we're working with the various bodies that look for a P60 currently to say, I don't know, mortgages, local authorities, social protection, to explain to them that the P60 will be gone and it'll be replaced by this end of year statement from Revenue, so that if they're looking for proof of incomes or earnings, that they'll be able to use that.
Okay, just two more quick ones. List of employees. You said there in June 2018, that we can submit a list of employees into you. If there was somebody on a payroll, say from 3 or 4 years ago, that never got a P45 for some reason, just say they were a seasonal employee for a couple of weeks, are you going to automatically P45 them off?
No, so what we're looking for is a list of your active employees. We may still have that person registered on our system as working with you. If you supply your list of active employees and that person isn't on it, what we will do is cease our record. So I don't know, people have told us they get P2Cs for people who aren't working with them anymore. That's because we think they're still working with you, so what we're trying to do is tidy our records to match your records. So if that person isn't on the list, we'll cease them on our side and they'll no longer be on your P2C. And if they happen to be working elsewhere and still have credits assigned to you, we'll be able to move those credits over.
Okay, and last question then. I work for an accountancy practice up in Donegal, and you mentioned the shoebox. That there is practical. Their shoeboxes come in checks are there, people are being paid net. There's no point in saying it doesn't happen, like, you know. Somebody's agreed €100 a day, say in construction or something, like, you know, they come in at the end of the year and we then prepare the P35. There's no point in saying it doesn't happen, because it does. So is there any kind of, you know, from the 1st of January 2019, any kind of I'm not saying, you know, time to get this sorted, like, you know, maybe, like, you know, the first couple of months to try and get people into this new system, because it's going to be very difficult when you have a guy that's an electrician, 3 employees, working around the country. He comes into me in December and he says, here you go, there's the stuff, chat to me, or give me a ring, tell me what I owe. It does happen, like, you know, and it is happening all over the country. You chatted about micro employers, 110,000. Like, I have 60 or 70 people we do payroll for, and they're all, every last one of them's in that category. You know, and that micro, you know, kind of, not all shoe boxes, but it does happen a lot.
Yeah, I suppose, I mean, we're well aware that, you know, this happens, and it has been accepted, I suppose, by both the accountants and the agents, and by revenue, because at the end of the day, the statutory return was the P35. So once the money came in at the end of the year, we accepted it. Going forward, it's not going to be acceptable. What I would suggest is that you meet with all of your people who you know operate in that way. You explain to them that the process is changing. We have lots of information and leaflets that we can give you, that you can give to them to set it out. But I suppose the biggest stick in all of this is there will be interest and penalties for every time that they've paid somebody and they haven't returned it to revenue. And that's something that you need to make clear to them. Whereas before, the interest and penalties came after the statutory return, the P35, it's now going to be on a monthly basis. So that's the message that you need to bring back to them. You have 6 months now to get them to change the processes that they're currently operating under. And there's no harm to try and get them to change that now for 2018, because you still have to do your P35 for 2018. But if you start now, explaining it to them, and it is an education process, and it is something that you will have to engage in with your clients. And I suppose that goes for anybody that's, you know, not working just within a business as an employer. Where you're an agent, you will have to contact all of your clients and make sure they understand. Now, we have been out there, we have been meeting as many employers as possible through the various representative agencies and bodies. So a lot of them are aware of it. As Ruth mentioned, I met the IFA on Tuesday evening in Letterkenny, and certainly that was one of the queries. You know, I just have somebody maybe that works for me a couple of days a month, or my son comes home at the weekend and he does some work for me. How am I going to return that? And the bottom line is it has to be returned when the person actually is paid, on or before the person is paid. Some of them suggested that maybe they would pay just once a year. So that's fine, but employees won't be happy if you just pay them once a year. You know, realistically that's not going to happen. But at the end of the day, they're used to that process. Change is difficult, people don't like change, so you have 6 months to sort of get the message out there and educate them. And interest and penalties will be a stick, you know, and it will hurt them. And as Ruth said, it will be regrossed, so they'll be hit on the double. So that's the message you need to get out there. Okay?
Okay, I think that's very clear. Next question there. Thanks, Amanda.
Hi. This phrase you keep using, the on or before for the return. Could you just talk to me about that in practicality? So from my point of view, we calculate payroll on a Tuesday and payment hits the employee's bank account on a Thursday. So when are you expecting to receive that return?
So we expect to see what we call the payroll submission, which is the pay and the deductions for each employee, on or before the Thursday. So it's the date the payment is made available to the employee in their bank account or handed to them as cash or a cheque.
Okay, thanks.
Any other questions? Either they're all in shock or they're very shy today. Okay, we just won't hear on this question there.
The new UCC, so the dreaded public sector.
Yeah.
I don't even know where to start. A simple question. Pension-related deduction, pension levy, refunds. If that is your only source of income in a year, at the moment it sends the P35 into a spin, because your income is a minus, but there is tax and PRSI deducted from it. Will the new system be able to cope with that?
Yes, so again, as we said, we understood tax often and not payroll. So one thing that came across loud and clear in all our engagement with payroll people is there are instances when there are both negative figures or zero figures and deductions. So based on our engagement with payroll people and with the payroll software developers who also know that, the new submissions allow negatives, allow zeros, because we knew that was an issue with the P35.
Okay, and just another comment. We've been trying for the last year to get all our employees to register using my account, you know, saying to them, revenue won't speak to us, you need to go through this thing, get yourself registered, blah, blah, blah. I don't know if you've had any interaction, but I've spent, I would say in the last 3 months, at least 10% of my day, every day, sitting saying, no, you know the add jobs and pension bit, where the person is at the other end of the phone, you really need to get someone to look at how easy it is to use my account. Because if English isn't your first language, which we would have a lot of employees, it's not simple.
So yeah, on that, I suppose, when we did design my account, we did do a lot of usability testing. We actually road tested it with both transition year students, because they were ones we thought would be starting jobs, also with age action, because potentially older people. So it did go through a set of usability. And if you look at the design, some people actually complain about it because you have to do 10 steps. It was very much designed to be question by question, so that you led the person through the process, rather than, if you think of the old form 12A, said, are you resident, yes or no? And the person was going, how do I know, am I resident, yes or no? If you go through the Jobs and Pension Service, it asks you questions you can confidently answer. Did you spend 183 days in the country last year? You can answer that. So it has been designed with that in mind. I will caution, though, to say that the add jobs and pension should only be required for a first time ever employee. So if someone has never worked before, so it's the old Form 12A cohort, as you may know them. So someone who's never worked in the country before, or it's their first job, transition year student, college student. Other than that, employers need to be doing the P45, P46 process. And in January 2019, that'll be a lot easier, because all you'll have to do is request, all your payroll software will do is request a revenue payroll notification for that person with their PPSN. So emergency, as I mentioned, will go away. The only time you'll have to operate emergency is if you don't have the PPSN for the person. So we obviously can't tell you how to deduct in that instance. Or if it is the person's first job in the country, and they haven't registered through the Jobs and Pension Service. It is worth noting, and I know I spoke of something recently and people didn't realise, since last November, agents do have access to jobs and pensions. So if an agent is acting on behalf of an employee, similar to how they can register a company or register someone from income tax, they can also use the Jobs and Pension Service for an employee if they're operating on their behalf.
Just in terms of the employees, we haven't focused on the employees at the moment, because the main focus is on employers and getting it right from an employer perspective. But we will be focusing on employees and outlining the changes for employees towards the end of the year, and certainly into next year, when the changes will actually physically affect them. So it's not that we've left the employees out of this, and we will certainly be encouraging them all to go on, use the My Account, particularly for the P60s that they'll look for at the end of 2019. So we're focused on employers, but we will be focusing on employees as the project progresses.
Okay, thank you. Next question. Amanda, yeah.
Questions. Firstly, can you use, you mentioned before about the different names. I know I have an employee who uses a different first name to her official first name. And I did the PPSN checker and it gave an invalid. Will it cause an issue if you use on the returns and everything else, if you use her what she goes as opposed to.
Yeah, no, it won't, and that's why all we can say on the checker is our records don't match yours, but if you've verified that that is her public service number and she does go by another name, it was more, the reason we developed that was a lot of payroll people told us they're very far removed from the person whose PPSN they're trying to enter, and sometimes they're handed on a scrap of paper and they want to check that it's correct. But if you know and you have proof, you can use that number and it won't cause an issue.
Okay, just another couple of quick ones. With a new employee, should you do the RPN when they start rather than when first payroll, or is it, do you wait first payroll?
Should be near the first payroll. So the way we've designed it with the software is, as you're going to go and start that payroll run, the payroll software says, can I have the revenue payroll notifications? Because at that stage, you're hopefully, if it's a mover, so someone who's left somewhere else, hopefully they've been ceased on the other side, and then they will get the benefits of the credits and stay on the cumulative system where possible.
Okay, and just follow on from that, I presume because you're paying people when they leave mid-month, it's a monthly payroll.
Sorry?
Wait, it's a monthly payroll, I suppose, because you're paying them when they leave. You actually do a return for when you pay them mid-month. You do a payroll return.
Yeah, so the submission comes whenever you pay them. So if you pay out a cycle for any reason, you need to submit that data on or before the payment. So if you're normally submitting monthly, but you happen to have somebody underpaid and is looking for their money, and you have to run a bonus run or things, you submit that when it's paid as well.
Okay, thank you.
Okay, next question, Maria.
Sorry, it's Pauline Helena. Just two questions. Just coming back to the question beforehand. We, from a GDPR perspective, which is coming in 25th of May, we don't have to get the P45. So you're saying that the jobs and pensions thing is only for new starters, as in never having a job before. How does employees go on and register their employment with us? Because we're sending them to the jobs and pensions section. But the way I'm picking up is that's incorrect. And the second question is, we have quite a lot of leavers every month, and we don't put the leave date in the system until literally before we hit the button. Should we be putting the leave date in quicker because the two systems are going to talk to one another?
So sorry, on the first one, on GDPR, you're saying the new starter won't give you the P45?
Yeah, some of our employees won't give us the P45, so we have to go through P46s.
Yeah.
But should they not be, like, they used to be able to ring up the revenue and say, I'm starting to work for Joe Blogs, here's his employer's number, can you transfer my credits? How can they now go on to their My account and transfer their credits?
So they can still do that. They can add a job. So there's people who don't want to, I suppose, show a new employer their previous pay and tax because maybe they said they got paid a lot more at their last job when they were negotiating their pay at the new job, or for various other reasons that they don't want to share the data. They can go on and register if they want to, because they don't want to hand you the P45, and they can go on through My account and they can move their credits over to the new job, and that will send a P2C currently out to you, and in the new world that will send a revenue payroll notification to you.
Okay, next question down the back. Yeah, Jared.
Oh, sorry, on the levers you did mention, sorry, I knew there was a second part to your question. On the levers, I suppose, we're trying to make it as seamless as possible with your payroll run. So, I mean, if you have a leaving date and you enter it, the payroll software can send us a submission with just that leaving date and we'll update our system. Or if you're doing it as part of your payroll run and you're paying them anyhow, and there's always payments after leaving, and we've rules that we've lined out with the payroll software how to deal with payments after leaving as well. But if it is you're doing it all in the one run, you can submit it with that last payment.
Okay, yes, down the back.
Hello, just a quick question on the RPN. If an RPN changes after you've run...
Sorry, we can't hear you. Could adjust the volume? Yeah, okay, go ahead.
Sorry, can you hear that?
Yeah.
Yes.
So, just a quick question on the RPN. If an RPN issues after the payroll has been processed, how is that treated? Because your monthly statement is going to differ. You're expecting a different tax and PRSI figure for the employee.
No, so the monthly statement will be based on the calculations you have performed in your own payroll. It won't be based on us doing calculations for that person's tax based on their latest RPN. We do know there'll always be timing issues. You might start the payroll run on Monday, not finish it till Tuesday, and the person's credits could have changed Tuesday morning. The statement is really just a sum. It's like if you had sent us an Excel spreadsheet and you put a sum at the end, it's a sum of everything you sent us. So we know there will be times where there is that time lag between when the payroll has started and maybe someone changing their credits, so it won't cause any issues. You will apply the new credits in your next payroll run, which will alter the deductions you calculate, and they'll form part of the next statement.
But towards the end of the year, that could cause a problem, though, could it?
Well, at the end of the year...
At the final payroll, if you've changed an RPN after you've submitted the December payroll, your overall balance is going to be out.
Yeah, well, so all the employer has to do is use the latest one available to them when they're doing their calculations. If an individual has made a change that late in the year that results in a refund or an underpayment, we treat it as part of the individual at that stage when we're looking at their tax affairs. The employer has met their obligation by using the latest one that was available when they were making that payment.
Will it still be the same process that after the 9th of December you don't issue RPNs?
No, we'll be able to issue RPNs all the way up till the end of the year.
That's great. Thank you very much.
Thank you. Just down at the very back again. Sorry.
Can you hear me?
Yes.
Yeah. I look after an approved retirement fund, a payroll, and there are pensioners on that payroll with multiple employee records for different accounts they have. How will their tax details be treated? Will they have to allocate them between the different records, or can we transfer them internally?
So I think the question is around someone who is the same employee is on the payroll multiple times.
Yes.
So again, that's something that came up quite commonly in our stakeholder engagement. So the example I gave was the nurse, and the HSE have told us they'll have the nurse. So Sinead will be the nurse. She's also there as home care help, and she's also there as, I don't know, out of hours support or something. What we have devised in the new system is something that we call an employment ID, which is a unique number that's set by the employer to reference that employment. And it really only comes into play where you have that scenario, where you have someone multiple times on your system because you're paying them under maybe separate T's and C's and producing 3 different pay slips for them. The employer will set the employment ID in that instance, so potentially you have 1, 2 and 3, and it'll be the nurse, the home care help, the out of hours support, and there will be 3 RPNs generated for that person with credits for each of those employment IDs. They can go online and see those 3 jobs with the HSE with each employment ID, and they can choose to allocate their credits whatever way they want. So they might put them all to one, or they might actually spread them across depending on how they want to manage their affairs.
For this particular payroll, it's an ARF payroll, so most of them are pensioners and they could be quite old, and they get irregular payments from individual accounts throughout the year. So they might get one ARF payment in March, and then they could get a PRSA payment in September. So I'm just wondering, like, if they allocate all their tax details to the ARF payroll, they have nothing to use against the PRSA payment later in the year?
Yeah, so again, I suppose on the people who are unable to use my account, potentially older, obviously we do have the telephone support for them, and they can ring and ask for their credits to be allocated. I know Sinead has done a number of workshops with the Insurance Association where ARF payments have come up, and we understand that often they're paid only once in the year, but they can be paid more than once in the year.
Yeah.
So if they have them allocated to the ARF, then they'll be used against the ARF and they'll have nothing against the PRSA. They can choose to split them, and they can ring up revenue and ask for that split to happen. Is that probably right, Sinead?
Yeah.
But
That's
as a
what's
pay-
come back from the Insurance Association as well, and certainly that's what we have reiterated with them. So again, that's sort of an education process for the people that are operating ARFs, etc., to speak to their clients and advise them, you know, because some of them may have other employments and have an ARF as well, and that they need to go in and look at where their credits are actually allocated themselves.
Okay.
And if
So-
they can't do that, they can contact us on the 1890.
Okay, so just the last question. As a payroll provider, we do not have authority to allocate tax details between the two records they have on a payroll.
Sorry, you don't have the ability.
That's a question I'm asking you. Do we have the authority to allocate their tax credits between the two different accounts?
No, you don't have the authority to allocate the tax credits.
No.
You need to
No.
set them up. There are two employment records. They'll have a separate employment ID. The payroll software will look after that, and they will get an RPN for each of them, because the difficulty we've seen where people are allocating credits themselves is maintaining the cumulative isn't working, and it's splitting across, and actually people are getting twice the benefits of the credits sometimes between both.
Okay, thank you.
Okay, next question, just in the centre.
My question is actually the first question there in the book with regards to the TRS figures. Just wondering, have you been in contact with the healthcare providers and with regards to how they're going to give us the TRS figures? I know at the moment we are getting TRS, we'll say when we do get the BIK figures, but I suppose we have noticed kind of discrepancies in what we're getting. Also, we're not actually getting the figure that we would actually put up in P35. We'd be getting, we'll say, the €200 rather than the €1,000 or whatever it might be. So just wondering, have you any feedback from them on how they're going to give us these?
Okay, just for everybody, prior to the conference we did send out an email requesting questions for revenue. I was going to cover them later, but just as you've asked them now, just to let you know, the questions are included in your pack, and the question that this lady has asked is on page 33 of your handout. I know we submitted these to Ruth and Sinead and David prior to the conference, so who would like to take that one?
Yeah, so I suppose on the medical insurance, again, something that came up loud and clear during the consultation process was that in payroll you didn't know the amount to be reported based on what's required through the P35L currently. So what we've actually done is change what's required from employers. So what we're looking for in the payroll submission is the BIK-able amount, so it's the amount you're actually running through payroll. It's not the TRS-able or the tax relief at source-able amount, because that is something that payroll don't know, because it can depend on children and qualifying adults and that thousand. So from 2019 onwards, all we're asking you to report is the amount that you have BIK'd through the payroll. And we have been talking to the health insurance providers to make sure they're aware of the changes as well.
And we will be putting up some guidelines around all of that when we have it all completely tied down. But as Ruth said, that's the way it's going to operate. But there will be some guidance up on revenue.ie in terms of scenarios and how they should be applied. We're just working on those at the moment.
Okay, thank you. Next question. Yep.
The employers list that's going to be issued in June, the request letters for employers, will they be issued to agents as well, or are they just going to go to the employers, and how will that information be submitted into revenue?
So on the list of employees, we're going to put guidance on the website explaining to employers around the list of employees, particularly for larger employers. Actually, we'll make direct contact with those employers to inform them that it will be required, and there will be, we're looking at putting something potentially into the Ross inbox as well to make them aware. If an agent acts on behalf of an employer, they will have access to that facility as well and will be able to upload on behalf of the employer.
Okay, thank you. And just one last question. Just with regards to very small business who may have just one employee on a weekend basis, and they're at the moment currently like operating, say, on an Excel spreadsheet, you know, but the correct taxes and everything like that are being deducted, and they pay over them and pay it in a correct way, and then they file their own returns because they've registered themselves with ROS. Are those people now going to have to get a software package to actually do their payroll now? Or?
No, we're not requiring anybody to get a payroll software package, and there will be an online facility whereby if they've done out their calculation using an Excel spreadsheet or pen and paper, they'll be able to go on to Ross and input that information onto the system and submit it. If they have what we know as an e-filing exemption, where because of various circumstances they're not required to file their returns electronically, they will have a paper return that they will complete and submit. And this usually applies due to an age criteria or sometimes in relation to non-availability of e-technology or broadband. So those options are there for the smaller employer. They still have to calculate the payroll.
Okay, thank you. Down the very back.
Can you hear me? Yeah.
Yes.
We currently have some employees on the SARP program where we would manually override their tax. So how would you suggest from January 2019 if we're issued a PR, an RPN?
The SARP rules will still remain. There's no changes to those, but obviously in conjunction with the likes of shadow payroll, where you're not getting information maybe right at the time, there is the option to mark it as a shadow payroll until the calculations are corrected, and then we will expect to get the corrected payroll within a 4-week period. So whatever they've been paid should be returned, whether the SARP has been calculated or not, and then if the SARP is calculated at a later date, then that corrected payroll information should come in to us. It's a bit difficult to hear the actual question.
Yeah, I guess at the moment we're manually overriding their tax. So I'm thinking our payroll software provider.
And when you say you're manually overriding the tax, are you correcting it?
Yes.
Like to make it actually correct for the payment, or will you have to correct it at a later date?
No, it's corrected at each pay period. So they're paying less tax than what the P2C is saying they should be because they're part of the programme.
Yeah, so then, I mean, that can apply where there's a foreign tax credit as well that we don't have and isn't issued as part of the P2C. So as long as you are submitting the correct pay and deductions as part of that, that's what will be taken. As I said, we don't perform calculations based on those pay and deductions when you submit it, so it's not like we're saying, ooh, that income tax looks wrong for that payment. We will then know that that person is SARP, and when we're looking at them at the end of the year as an individual, we'll understand the reasons for that.
That's fine. And just one other quick question. What's the expected turnaround on the RPN? Is it the same as the B2C, 24 hours?
No, it's instantaneous now.
Yeah.
So
Okay.
because we're catering for new employees through the RPN, you will be able to, so if someone updates their credits on my account online now, Helena does them, and I call down the RPN in the next couple of minutes, I should get whatever is the latest from Helena's updates made.
Okay, very good. Thank you.
Thank you. Next question to centre. Sorry, I can't hear you.
Can you hear me now?
Yeah.
Will the RPN recognise finish date and finish periods in the software when a supplementary payment needs to be paid? And if so, what tax basis will it put the employee on?
Sorry, could you repeat that question? It's just very difficult to hear up here.
Sorry, for a supplementary payment, will the RPM recognise, that they are a leaver, but there is an additional payment to be made? And if so, what tax basis will it put them on?
So the RPN will give you most of the same data as the P2C gives you. So we'll give you their credits, we'll give you their rate band, and if there's previous pay and tax that needs to be included in the calculations on a cumulative basis, it'll provide that for you. So in terms of a supplementary payment, you'll just calculate what, based on the cumulatives that you have already, if it's cumulative, or the week one, if it's week one, the deductions that need to be made on that supplementary payment, and keep that in your cumulatives going forward.
Yeah. Okay, so we would need to manually overwrite what's in the payroll system, even though the employee may have, moved on to another employment.
Yeah, so that's a payment after leaving, more or less.
Yes,
so the rules for payment after leaving, so like anything else, you should always be looking for the latest revenue payroll notification. If that employee has actually now left and transferred their credits elsewhere, what you will get back on the RPN at that stage could be 0 credits and 0 rate band, and that's what you'd apply to that payment because they've already moved. So it's not like using the last P2C in a payment after leaving.
Yes, so there'll be no manual intervention on our behalf.
No.
Okay, thank you very much.
Okay, we're running into the coffee break, so maybe we'll just take 2 more questions, and then please remember that both Ruth, Sinead and David will be at the revenue stand for any other questions that you have. So can we take 2 more? Just one down here.
Hi, I'm just wondering on the end of year statement for employees, we'd have a large number of pensioners who wouldn't have access to a PC. Will those statements be posted out to individuals, or will they only be available online?
Yeah, it'll be available online, but for those that are not enabled, we're working on designing a facility whereby when they contact us on the 1890, there would be an automatic, press to if you require a P60, and then we'll arrange to have that sent out to them. So something along those lines will be available. Some employers have actually told us that they're going to continue to provide a type of P60 for their employees, because given the nature of their employees, they're not really familiar with technology, particularly in the manufacturing operations side, that they're going to continue to provide a P60 type of document for their employees. That's entirely up to each employer. We're not suggesting that that's something you need to do, because the obligation has been removed as part of the new legislation. So again, it is something maybe that some employers might want to consider, dependent on the type of their workforce.
Okay, thank you. Sorry, one last question.
Just a question on, just clarity on week 52 for 2018. In our case, if week 52 finishes on the 30th of December, the payment wouldn't be made to the employees until maybe the 2nd or 3rd of January. We would call that 2018 P35 and P60, but will PAYE Modernisation expect that going to 2019?
Should always have been 2019, so it isn't actually a change for PAYE Modernisation. How PAYE for the employer always worked was on what's called a receipts basis, so when the money was paid. There was a difference for the employee, that the employee could choose to have their end of year P21 calculated on an earned basis. That was removed this year for anyone who isn't either self-employed or paid under an exclusion order. So from an employer's perspective, always pay as you earn was on a receipts basis, so it was when you paid. So if you paid on the 1st of January, that was a January payment, should be in the January P30 and should have been in 2018's P35L, and that remains the same under PAYE Modernisation.
Okay, thank you very much for those questions. I think we could have dedicated the whole conference to PAYE Modernisation, to be honest, in hindsight. But please remember, they will be at the stand for any further questions you have during the coffee break. The questions that were submitted to us, we didn't get a chance to go through them, but they are providing us with answers, and we will circulate them to the people who submitted them. Thank you very much to both Ruth, Sinead and David. We'll extend our thanks to them. Take our coffee break. So we take our coffee break now, and if we can recommence at 11:30. Thank you. Thank you, guys.